get started. Welcome everybody to our Health and Wellness Council meeting today, Tuesday, October 25th. We want to thank, first of all, our annual sponsors, Centera Healthcare, and Centera, I'm sorry, and Michelle Eckhart is here. She's our leader of the and chair of the Health and Wellness Council. Go ahead, Michelle, let you say a few words, and we'll get on with our presentation.
Well, good afternoon, everybody. Thank you so much for being with us today, and thank you, Margot, for hosting. I think that, well, it is absolutely the pleasure of Centera Northern Virginia Medical Center to be the Health and Wellness Council sponsor, as clearly as the last number of years have demonstrated, the health and wellness of our communities at large is more important than ever, and is certainly elevated in terms of our collective priority. So we're delighted to be the sponsor, and we are thrilled with today's program presentation and presenter. So without further ado, let me bounce that right back to you, Margot.
Thank you so much, Michelle. And at this time, I'd like to introduce Kenn Penn, who is President and CEO of Chamber Solutions, and he's with the Virginia Chamber of Commerce. His responsibilities include creating and managing affinity benefit programs, as well as coordinating the promotion and distribution through local and regional chambers of commerce across the Commonwealth. And Ken, I'll let you go ahead and you can add anything on to that you would like to. And thank you so much for being here today.
Sure thing. It's my pleasure. And thank you so much for having me. It's an honor to talk with this group and share the information about this really important initiative that the Virginia Chamber is undertaking, not only on behalf of the Virginia Chamber, but all local chambers across the Commonwealth and their respective business members. As pointed out, I've run Chamber Solutions for decades now, and this will be the culmination of that experience. And this is a really big undertaking. I actually led the lobbying effort on the 2 bills that made it through the legislature this past session that really gave us the enablement to create the program that we're going to discuss today, which is a self-funded consortium health plan. And so I've got a few slides to run through that kind of give you an idea of what the program is. And I'll share with you where we are in the process. It is a very complex endeavoring, and it still requires authorization through the Commonwealth. And so I'll share more with that here in a second. But certainly this piece of legislation could not have passed without the help of the Prince William Chamber and the efforts of the staff to help us bring forth all the necessary votes and support in order to get this passed. And so I would like to thank the Chamber and all of its effort, not only this past session, but in sessions prior that really laid the foundation for us to get this through. This was a long slog, if you will. It took 5 years, 2 governors, 3 vetoes, and countless hours of work to get this legislation passed. And so, with Governor Youngkin coming into office, the path made it clear for us that we would finally be able to get across the finish line after 3 years of consecutive vetoes. So with that said, I'll run through the legislation and go over the high level of that and share with you where we are in the process in terms of bringing a program to market. And Michelle, to your point with regard to the importance of a community's wellness and health, that is where this program is going to shine. Because unlike traditional insurance programs where the rates are the rates and the benefits are the benefits because that's how they're prescribed by federal law in the affordable care market, given that these are self-funded programs, we will have the wherewithal to target specific dread disease or wellness initiatives and provide real incentives to curb utilization and support wellness initiatives. Because at the end of the day, for every dollar that's not spent on healthcare claims is a dollar saved by every one of its participating member businesses. So that's the beauty of having a self-funded program. And that's why we wanted to get this enabling legislation, is so that we could actually start to bend the cost curve for small businesses across the Commonwealth. So that is an important attribute of this legislation. So without further ado, we'll start to walk through the slide deck, and we'll take questions along the way if need be. So it may not be abundantly clear, but Virginia's business community is made up of small businesses. And believe it or not, 90% of all businesses in the Commonwealth have fewer than 50 employees. So when we looked to do this legislation, that's the audience for which we targeted. So this legislation is designed for 50 or fewer employees. And that is not coincidence that aligns with the Commonwealth's definition for small employer as it relates to health insurance today. So fewer than 50 employees is where this is going to lie. The other piece that is no secret to most of you that are on the call today is that insurance costs continue to escalate. And over the past 10 years, there's been upwards of a 54% increase in the cost of that coverage. Unfortunately, there is an inverse reaction to the premiums escalating, in that fewer and fewer small businesses are able to afford to offer coverage to their employees. And in fact, in the 20 years or so since the year 2000, where approximately 50% of all small employers offered coverage back at the turn of the decade, today it's less than 30% offer. So the number of employers that are able to offer coverage in that small group market continue to decline. So that was another area we needed to address. And then outside of the, if you will, the given generalities of small employers drive Virginia's market, cost coverage is going up, and number of employers offering coverage is going down. If you're not familiar with the Virginia Chamber's blueprint, they survey thousands of businesses across the Commonwealth every 5 years. And they listen for what are the hot topics as it relates to what their initiatives need to be, such that they can be the voice for Virginia's business. And the findings of the most recent blueprint study said that that small employers in particular, but all employers, regardless of size, were looking for innovative and creative ways to lower the cost of healthcare. And then most specifically, small employers were asking for alternatives to the traditional Affordable Care Act, and were looking for ways to join together in some sort of pool or consortium that would allow the cost of coverage to be lower than it is today. And so all of those things aligned with the Virginia Chamber's initiative in terms of sponsoring legislation to make all of those things come true. And so there were two bills that were passed. One was a Senate bill that was patroned by a Democrat, and there was a House bill that was patroned by a Republican. So it is abundantly clear that this was a bipartisan issue, and the support that we got came from all sides of the aisle. And so this was, without a doubt, a really comprehensive piece of legislation, and it addressed most, if not all, of the issues that whatever side of the aisle brought to us, we came up with a thoughtful and innovative solution. So the bills passed in this last session, and the governor actually signed the bills on April the 11th with an effective date of July 1st. But the effective date didn't mean that you could immediately go out and sell something. It just meant that the legislation became effective. And from that point forward, the Bureau of Insurance had to, as per the legislation, and I'll use the term, promulgate rules and regulations to give these types of programs the authority to be offered in Virginia, and for their continued oversight and regulatory review. So the Bureau actually embarked on that endeavor in May, just after the signing of the bill in April. And even as of this morning, after talking to the Bureau of Insurance, they continue to work on the regulatory framework that's going to be required for these types of plans to be offered. In June, you'll see the logo up on the top right, the Virginia Chamber announced the Small Business Health Alliance. And so that was really the first public acknowledgement that this legislation had passed, and that the Virginia Chamber would be endeavoring to create the first of its kind in Virginia, which would be a small business healthcare consortium. And it is through this alliance with the local chambers and other associations that serve small businesses across the Commonwealth that we are providing the foundational membership base, which will be eligible to participate in this plan. And we'll touch on that more in a few slides. And then if the timing holds as we hope, and the Bureau soon releases the regulatory framework, we'll begin to more formally educate the local chambers of commerce and the insurance professionals that will represent this program about the offerings and what it looks like and all of the various particulars sometime in the December and January timeframe. And if all things continue, then in mid to late Q1 of 2023, we'll actually be able to launch the program. So you can see we're still a few months out from being able to bring a product and certain details to market. But I will share with you where we are in the process. And I'll also share with you the framework with which this legislation requires these programs to be built. Now, as I mentioned, the Chamber has embarked on this initiative and is leading the charge to create what will be the first of these programs. But there could be other associations that had the wherewithal and means to do this as well. So it's not to say that this will be the only one. And then for reasons that you will see a little bit later in the slide deck, there won't be many of these. So there won't be 15 or 20 of these programs offered across the state. We would imagine that there could be 2 or 3 at most that would form these types of consortium healthcare plans. So the 2 bills, although we list 2 bill numbers because 2 pieces of legislation passed, they are identical legislations down to every comma in every period. So we just wanted to acknowledge that we had 2 bills, 1 through each chamber, 1 by a Democrat and 1 by a Republican. But we wanted to give credit. And so that's why we always show these 2 bill numbers, even though it is the exact same legislation. But as we formulated this legislation, going back now probably 5 years, it became abundantly clear that in order to bring comfort to everyone that would touch these types of programs, that there needed to be 5 pillars that would support how these programs were structured. And so I'm going to go through in more detail what these 5 pillars are. But this is how we were able to overcome the objections, how we were able to build consensus around the program, and how we were able to demonstrate that these were not going to be fly-by-night operations, and how it was very, very important to the legislators, and again, to those that would manage these types of programs, that there be financial security and integrity to these programs. So as a side note, you may be wondering why these programs hadn't existed before this legislation passed in this session. And that goes back to the late 80s and early 90s, where there were similar types of programs that were structured and that were in the Virginia market. And literally overnight, at the stroke of midnight, one of these programs that was in Virginia that covered thousands of lives failed because it went insolvent and became bankrupt. And so the result of that happening was that the Bureau of Insurance, for all intents and purposes, regulated these programs out of existence. And so the types of programs that we are building today, because of those regulatory requirements, could not have existed until such time that this new legislation was passed. And so again, the lessons learned from that event back in the late 80s and early 90s, it ensured that we did the right things for the right reasons, and we created the programs that would be financially secure over time, regardless of what the claims history may be. So let's run through these 5 pillars in more detail. So first off, we have to be able to provide broad access to small businesses. And as I mentioned, so this is designed for any small business that is a member of one of the participating chambers or associations, that has fewer than 50 employees, regardless of health history, will be offered coverage through these plans. And not only regardless of health history can you participate, but one of the other attributes that we put into the legislation was the fact that an association or chamber of commerce cannot condition participation in that association on health status. And so if we could just pause here for a second, and this was something that the legislators never even envisioned, but this is something that we knew would be important. So that's why we took the initiative to put this into place. And so it means that an association or a chamber can't redline a group or an individual on the front end and say, oh, guess what? Because you have a bad health history, we're not even going to let you join the chamber. And so had we not done that, they still could have conditioned that membership on that health history, and then they still could have met the requirements in the first bullet. The other thing that was important is that these programs needed to be offered by not-for-profits. And so that's why you see that the only 2 types of entities that can sponsor these programs are 501c6s and 501c5s. And so 501c6, for those of you that aren't familiar with it, are chambers of commerce and business associations. And a 501c5 is the same thing, except it's in the agrarian area. And so vis-a-vis, that is the Farm Bureau. And so let me say that the program that we are launching in Virginia, although it is being led by the Virginia Chamber, it is also fully supported and endorsed by the Virginia Farm Bureau as well. So we are working in lockstep with the Farm Bureau as we work on this program. Pillar 2 is delivering the lower cost of coverage. So these programs, because of the pooling aspect of bringing thousands of lives together, spreading that administrative cost and spreading the cost of the healthcare claims, we expect to be able to launch the program with premiums that are as much as 15 to 20% less than what's in the current market today with a comparable Affordable Care Act. And in states that have had these types of programs in place for 3, 4, or 5 years, those states are seeing savings upwards of 30 to 40% less than the Affordable Care Act rates in their respective markets. So, so these programs seem to be running well, and we have been in contact with those other states that run similar programs, of which there are 5. And so we're working closely with those other states and state chambers to get information on their lessons learned so that we can determine best practices for us here in Virginia. As a reminder, these programs are self-funded. So that means the member businesses contribute into the pool to pay the claims. And if in fact they contribute more than is needed to pay the claims, the excess reserves, or if for those of us that run a business, the profit, it must only be used to help the participating members. So it doesn't ever leave the entity that's managing this. So it doesn't go back as extra revenue to any one of the chambers. It doesn't go to an insurance carrier. It stays within the bucket, if you will, and those excess dollars can be used as premium holidays. It can offset future claims. There's a variety of ways that those excess reserves can be used. But the long and short of it simply means that there is no profit motive in this type of delivery mechanism. The other piece that's really important to understand is that this isn't the fox watching the hen house. This is the members themselves manage the trust that administers this program and makes all the decisions. So the initial trustees will be appointed by the Virginia Chamber of Commerce, but after a 2-year period, the management of the trust is going to be from those members that actually participate in the program. So a local chamber member business will be nominated, and that executive will serve as a trustee, assuming that they are elected. And that person will help oversee and manage all of the aspects of this program. And so it is the trustees that determine where the excess reserves go and how they are utilized in terms of benefiting the participating members. So again, another one of the unique attributes of this program is the fact that it's member managed, and it's not some disinterested third party or an insurance company that's pulling the levers and triggers on this. It's actually the members. As you can well imagine, it is really important for all of the regulators, the Commonwealth, the governor, the Secretary of Health and Human Services, that the programs that are offered through these plans be robust, complete, and competitive with what is in the market today. And so to ensure that those types of plans would be offered through these consortiums, it is in the law that they must provide the essential health benefits as defined by the Affordable Care Act and the Commonwealth of Virginia. Additionally, so that people wouldn't come to these plans and be offered skinny plans, short-term plans, plans that really didn't meet expectations, the law requires that the minimum allowable coverage for any of these plans to offer is something that would be an equivalent to Affordable Care Act bronze plan, or to say it in a more actuarial tone, is it's 60% value, meaning that 60 cents of every dollar must be spent on claims payment. And so that is the bottom level that can be offered through these types of programs. And additionally, once an employer group joins the program where they're guaranteed access on the front, they must be guaranteed renewable on the back end. And so regardless of the health history that a group may experience over time, they're guaranteed to be renewed. The fourth leg of the stool is of the fourth pillar of this foundation is offering strong consumer protections. And so in the code, it states explicitly that there are no pre-existing conditions, period. So you can transfer in and out of these programs just like any other Affordable Care Act offering, and there is no penalty, no pre-existing conditions, no waiting periods. So these mirror the Affordable Care Act offerings as well. These plans also cannot discriminate based on health history. Now, that said, the program does use pool rating methodology and health history in order to determine rates. So for any of you that are familiar with the health insurance market prior to the Affordable Care Act, where the insurance companies in the small group market used health history to determine rates on a group by group basis, that is exactly what happens in this situation as well. In addition to all the regulatory oversight by the Bureau of Insurance, these plans must be annually audited by a certified public accountant, an independent certified public accountant, to make sure that all of those standards are being met. And the last pillar is to maintain financial security and solvency. And so I've mentioned this several times throughout, which is these plans, before they can come to market, must be licensed and authorized by the Bureau. And in addition, the Bureau has continued regulatory oversight, not just at the initial approval of authority. I mentioned earlier that we didn't think that there would be more than 2 or 3 of these programs offered in the Commonwealth. And the reason for that is this next bullet point. These self-funded consortium health plans must meet the same financial and solvency requirements as all other domestic insurers. And a domestic insurer in this instance means an insurance company that is headquartered in Virginia. So in the Commonwealth, in order for an insurance company to open its doors, it must have a minimum of $4 million in reserves. And so because these consortium health plans have to meet that same standard, before we can open our doors and offer coverage, we must have $4 million in the bank. And that $4 million is the baseline, because over time, as enrollment increases and the amount of risk that will come with that increases, that number only goes up. So that $4 million threshold is really going to be the barrier for many other of these types of programs to be established. And that $4 million in contrast to the other states that I mentioned that there were 5 of that have established similar programs, the solvency requirement in those states were approximately $500,000. So you can see Virginia was quite serious in making sure that over time these programs would not fail and that they would not face the dilemma that they faced in the late 80s and early 90s with the failure of one of these programs. In addition to the Bureau oversight and the financial solvency requirements, these plans must also be certified by an independent actuary to make sure that the rate setting is correct, not only for the protection of the plan long-term, but to make sure that the premiums, that the premium equivalents that are being charged to the employer groups is accurate and fair. And lastly, in terms of the security component, is in addition to whatever regulatory framework that the state comes up with, these plans are also subject to federal oversight through ERISA and the Department of Labor. And so with that, these plans have double oversight. They have the actuarial oversight requirement, and they have the certified public accountant review requirement. So as you can see, there's a lot of safeguards and protections built into these plans. And with that, we believe that over time, these will remain healthy, viable, and solvent programs that will be able to offer coverage for many, many, many years to come. So with that said, that completes the overview of the program, and I am more than happy to take questions, answer concerns, and give you any other feedback that might be necessary.
I have a question.
Absolutely.
Hi, Ken. How you doing, Ken? Mike Whitlock. How you doing?
Good, Mike.
Question is, so can one person business be on the insurance, number one? And number two is the employees, and of course, a business has to be a chamber member, right, to be able to get the insurance.
Correct.
Their employees can be on the insurance.
Correct.
Okay, what if you have like an employee that has insurance somewhere else and it sucks and they got health issues, so they want to go on our insurance instead of what they already got? Now that puts stress on our insurance. How does that work? I mean, is there any way to go around that, or we just have to eat it up, or what?
You have to eat it up.
Okay.
Yeah. So if that employer and or their respective family member is eligible for coverage, then we offer coverage.
Okay.
All right. And yes, they must. Any group that participates in these plans must be a member of a local chamber or one of the other sponsoring associations. But in this case, they need to be, in your particular instance, member of the Prince William Chamber of Commerce.
Yep.
And then lastly, our program upon launch is only going to cover groups of 2 to 50.
Okay.
Now, so that's a great question, Mike. So let me dig it just a little deeper into that.
Okay.
The law does allow for groups of 1 to 50 to be covered. The definition of a small business employer as it relates to health insurance is defined in the Commonwealth as 1 to 50. We are making a business decision from the inception of the program to cover 2 to 50. If, however, over time, say in year 2 or year 2.5, we see that the claims and the experience and our ability to pay claims and all of those things that go into this business decision, we may in fact roll back to 1 at that time. But upon launch, we're going to do 2 to 50 because it's just easier to manage that way, because an individual today can flow in and out of group coverage and the individual market with ease. And so what we don't want is somebody to come in and out of this program, because, I mean, keep in mind, this is self-funded. And so, so we just wanted to remove some volatility. And so that's why we're going to start with groups of 2.
Sure. Oh, no,
Thank
makes
you.
sense. Thank you.
Yeah, sure. And so I brushed over this in just the timeline, but let me also reiterate, if there are any insurance brokers or insurance professionals on the call here, these programs will be distributed through the local insurance professionals. So the relationships that most of you folks on the call today have with an insurance professional, you'll be able to maintain that relationship. We are going to require agents to go through unique certification. This is not your typical health insurance offering. Again, these are self-funded programs. There's a variety of contractual relationships that have to be pulled into play. There's really specific paperwork that's required. So we are going to require the insurance professionals that are representing this program to be certified to do so.
Chris, do you have a question?
Yes, good afternoon. Great presentation, by the way. Thank you for this. I'm a fairly new small business, as the members of the chambers know, but I have been looking for something like this, and I hope that this is available soon. One thing is for sure, I know that for hiring, it's going to make a heck of a difference in my industry because we do handyman services. But question is, does this policy, if we become a part of that group, the consortium, then are we able to offer this to both full-time and part-time employees?
So we will recognize as few as 25 hours. So it depends on how you're going to define your part-time employees.
Okay. Well, typically for, the common definition, I mean, less than 30 hours to me would be considered a part-time employee, but I didn't know what your rule set was going to be.
Yeah, so we're looking at 25 hours as the minimum.
Perfect. Thank you.
Uh-huh.
Does anyone else have any questions or comments?
I have another question, Mike Whitlock. Are the rates set across the board, or will it be set depending on the business?
It'll depend on each business, Mike. So we will look at the demographic makeup of your group and the health history of your particular employees. And from that, we will come up with a rate set that is unique to your business. Okay. Now, that said, the underlying foundational rate for all groups that are participating is going to be this pool, right? So we're spreading the risk amongst all of those employer groups that are there. And then we're just going to adjust the risk based on what your particular group looks like.
Yeah. Okay. Great. Thank you.
Uh-huh.
Yes. Are the certifications free, and how long does the certification take for the insurance?
Oh, yeah, absolutely. There will be no cost to the insurance professional for that. And it's evergreen. As soon as they're trained on the program, we'll have annual updates, if we're changing some of the various attributes of the program or changing some coverage offering, something like that. But that's just the normal course of any agent or broker training that would take place there.
And then what happens if the business drops membership? What happens to their employees?
So they will get notification that they must be a member, and they will have, again, the trustees have to make these types of decisions. We haven't firmed it up, but let's just say in general numbers, they're going to have 45 to 60 days to rectify the fact that they're not currently active members. And should they fail within that time period to rejoin or become members again, then they will actually lose coverage. They will be kicked out of the program. And so again, that is the code. The only way that any employer group has access to participate in the consortium is through the membership. So failing to maintain membership means that they haven't met their requirements and they'll be removed from the program.
Thank you.
Michelle has a question.
Yeah, Ken, I presume that that when the time comes that the Virginia Chamber will be working closely with the regional chambers to market and promote this among member organizations.
Absolutely. Yeah.
Organizations.
Yeah. That's exactly right, Michelle. That is a critical component of the program, is the delivery of this through the local chambers of commerce.
Okay.
And so with that in mind, it is the membership with the local chamber of commerce that gives that particular employer group access to the plan. So you don't have to carry dual membership. So you don't have to join the Virginia Chamber. It's a direct conduit. If you're a member of the Prince William Chamber, then you automatically have access to the program. And so not only will the chamber help us with the marketing to its respective members, it's going to be the insurance professionals in your market that are also chamber members that are going to be key and critical to the distribution of the program in the market as well.
Okay, that sounds good. Thank you very much.
Do you have any other questions for Ken?
So some more information is going to be rolled out in December.
Yes, so we hope to have more information available to the local chambers in December. And so again, to Michelle's point, it's going to be the local chamber that you'll hear from as it relates to this content, and giving you the updates. So this is a good stepping off point to tell you where we are today. So we have laid all of the Virginia Chamber has been working really, really hard since even before the signing of the legislation to study what the other state chambers have had to do, look at the generalities of the regulatory framework that's been required in those other states. And so we have already laid out the operational agreement, the bylaws, the trust agreement, all the other nitty-gritty pieces of foundational work. It's already been laid, it's done. And so right now we're sitting in a holding pattern, waiting on the Bureau of Insurance to release Virginia's regulatory framework. Once we have that in hand, then we'll be able to nuance the information that we've got today and then make application for authority to come to market. And then once we have that authority, then the real work begins, in which case now we can start to speak more publicly about what's been going on behind the scenes as we've laid that foundational work. So, and that's why this particular presentation you've seen today is quite broad brushed. It's really high level. It's really the 35,000 foot view. It's not even the 30,000 foot view. And it's simply because we don't know what we don't know, number one. And the other piece is we don't want to share information that may not be accurate if the regulatory framework that we've seen in other states doesn't align here in Virginia. So, but I just want to express that we're not sitting idly by waiting for stuff to happen. We are pushing forward as expeditiously as possible. And to Chris's point, this is going to be good for his business. It's going to be good for all businesses across the Commonwealth. And we are working really, really hard to get this to market just as soon as possible. So that's where we are in this process. And then in addition to the local chambers, we've had insurance agents clamoring for information, as you can well imagine. And so as soon as we're able to get this to market, it'll be widely available through the local chambers and those insurance professionals.
Thanks, Ken. There are a couple people asking if you would be able to share the slides. If you are able to, I can, if you email them to me, I can share them.
Yeah, absolutely. Yeah. So I'll send these to you, and you can distribute as widely as be.
Then maybe in the spring we'll have some sort of a follow-up meeting with you and invite our members again. Did anyone else?
Absolutely.
Thank you very much. Does anyone else have any follow-up questions or comments? We still have a little bit of time. If not, we can get on.
I do.
Okay.
So great job, Ken, with everybody in chambers doing this work over the years. The other question I have is, how many members total do you have to be able to do something like this? Or how many members do we expect to be able to spread the cost over?
Really good question, Mike. So, we're starting with 0.
Oh, that's a good start.
So our projections say that in year 4, we should have about 50,000 employees. Now, and you start to, so in insurance world, in order to get the total number of covered lives, meaning that you've got some employees that are going to cover one child or a family or whatever, you take that number and multiply it by 1.7.
Okay.
So in 4 or 5 years, total number of lives covered should be about 100,000.
Yep.
And as you know, this whole thing is, the success of this program is driving volume and driving scale.
Yep.
And so that's why it's really important that that we engage with the local chambers of commerce. For those of you that don't know, there are 120 local chambers across the state. We work with about 100 of them. And so we will have access to most small business across the Commonwealth through their local chamber relation. And where in those instances where we don't have that direct connection, I've made reference to other associations that are going to join in. And so if you recall, the $4 million threshold is going to be a really high bar to meet. Some associations in the Commonwealth that have already determined that they'd not be able to meet that. And so they're looking to roll in under our banner. And so we will their members will have access to this same program. And again, just as that the local chamber is helping us market to that, those other professional associations, if you will, or industry associations will be the conduit with which those other members would access the program.
Okay.
And again, Mike, to your point, all of that is to help drive volume. So the more associations, the more chambers, the more activity we get, the more volume we drive.
Yeah. So you wouldn't expect to get like big companies on this, would you? Like a Micron, they got their own stuff probably, right? You're looking for
no, again, if you recall, this is for 50 or fewer employees.
Yeah. Yeah. Good. Perfect.
Well, thanks so
Ken,
much, Ken. Go ahead, Michelle.
Yes, I just wanted to thank you very much for your advocacy and championing this program in the Commonwealth of Virginia, because obviously affording a new opportunity and potentially a more cost-effective opportunity for small employers to extend health insurance benefits to their employees is a huge win for business in Virginia. So thank you for all of your work, and we look forward to learning more as all of the pieces of this puzzle come together.
Thank you, Michelle. I appreciate that.
Thank you, everyone, for being here. Thanks once again to Centera and Michelle Eckert for being our annual sponsor, and Kenn Penn from the Virginia Chamber for taking time out to answer some questions and explain this very lucrative program that we hope to implement by next spring. So we'll be back in touch, and I'll make sure and send out the information to everybody on the Health and Wellness Committee and everyone in attendance today. Take care, and everyone have a great afternoon.